A disappointing growth report from Twitter sent shares of the social networking platform plummeting as hopes dimmed that it could sustain its rapid pace of expansion. Twitter went public last year, following in the steps of Facebook, whose initial public offering in May of 2012 was a major disappointment for many investors, after the stock lost nearly half of its value by the end of summer of 2013. Twitter has tried to be more cautious in order to avoid the mistakes its rival made, although investors have been keenly following user growth. Experts say Twitter isn't expanding as quickly as other networks because the platform is harder to use compared to Facebook or Google+.
We think that Twitter, to be honest, might be harder to understand, harder to access, and harder to use. It seems like there's a separate language, there's a separate culture associated with Twitter, which to those who use it might be very appealing, but for those who are just trying to get started can be somewhat alienating. And we think that, to some extent, has contributed to what we saw today.
Twitter itself seems to be acknowledging its shortfalls. Its CEO told investors that the company needs to improve its interface and mobile services in order to reach more users.